To begin with our study, we can first get into Equus's website. Once you get into X's website, you see a section called Apps underneath X's Primer. So this is where you should begin to do the a quantitative or intraday or a derivative analysis. And if you get into the Z-Search tool, you will see that a section called Derivative Scanner. Underneath, you see FI Open Interest Analysis. So this is one tab that you can keep it open. This will enable you to do this FI Open Interest Analysis. And what you get underneath here is the charts. And if I hit this D, I'm getting this historical data. And by zooming in, I can notice that Nifty was 18,800 around the 1st of December. Now it is 18,127. So we can see a solid 800 points correction. And it took close to a month. Yes, Nifty did gain all of them in a matter of 10, 15 days, but it managed to lose as well. So the point is, what exactly happened during these days by FII and Klein can actually give us an idea. Because if FII started offloading it, because we can literally see that the most recent action, the last 4 5 days, market kind of showing a sharp sell-off, a kind of impulsive bearish behavior. So this is suggesting us that any recovery from the current level may not stand for a long time. That's what the technically we are getting a sense. Although Nifty is still, around the highest point, just about 800 points from the all-time high, but still we see that there is an impulsive downward move. Is the first alarming sign that we should be careful about it. Let's see what exactly the data points are trying to convey to us. So as you see that this is data updated as of 22nd December 2022. Okay. And you can see a section called index segment, and I can do the same with respect to stock segment as well. And you can also notice that this is available not only for futures, we can do with call options and put options. Let's first understand what happened in index segment with respect to futures. If you look at the most recent day activity, that it is crystal clear that the clients are exiting their short positions and FIs are adding their short positions. So it seems like the clients are exiting short positions. It's not clients, but we can see that the clients are adding long positions but exiting short positions. So as the market's going down, those who had those short positions are started reducing it, and the clients are some clients are adding long positions as well. Meanwhile, we can notice that FIs are adding a short, and they are reducing their long positions. It means going forward, the FIA seems to be slightly bearish on the markets. Okay, and even Pro, I mean the the brokers, direct access, the proprietary clients, and even they are also kind of short in the market, and they are even reducing their long positions. So although we see that the technically market corrected 800 points, but the recent activity still suggests the market has a way to go down. And meanwhile, we can see that the fresh open positions are built on Nifty January contracts, and of course the Bank Nifty December and Nifty contracts, which is as usual, and it's quite natural that towards expiry the the current month contracts tends to reduce the open interest and next month. But meanwhile, the point is the FIs are adding a long positions. Sorry, the FIs are adding a short positions and clients are adding a long position. So that is the sign of kind of bearishness. If you want to see the history, what happened on 22nd, FIs added a short positions. 21st December, FI added a short positions. 20th December, FI added a short positions. But on 19th December, if you want to see what exactly the 19th, okay, this happens to be 19th. It was a sharp recovery. Okay, but on 19th we see that FIs have reduced their short positions. It means they were aggressive, but they reduced a bit. But it didn't stop for a long time, because the sooner the next day, okay, now interestingly, the 20th market was not that very negative, but we still noticed that FIs that added short positions. And then the next day it was a gap up open, couldn't sustain. So these are all the point which is making the uh, making the scenario to be quite bearish. This is the reason why we see that the rally now starting from this day, and even that the gap up couldn't sustain falling down, making us to feel that it's we still have some rooms to go down. The markets can still get much lower levels. This is one solid understanding that we take by doing this analysis. But this particular tool doesn't limit you to look at it from only this perspective. But at this moment, we got a very solid understanding by looking at it. So we shared our view on this particular line. But let me give you one thing, that this tool has a lot of features on top of it in terms of looking at it from call options and looking at it from put options, or even you can actually get into stock segment. There you can actually see that what exactly the FID activity is. But if you notice again, FIs are reducing their short positions, but they're adding a long positions. So we need to know, like, some stocks they are actually adding a long positions, but on the index segment they are actually adding a short positions. But for such a detailed analysis, it may take more time. So why not we can have another video and we can talk about that as well. So we are planning to have a frequent videos in terms of updating you in relevant to FI open interest analysis. So if you find this particular video is quite uh, worth spending this time, do subscribe this particular channel and make sure that you set the reminders well, so that the YouTube can remind you with our upcoming videos. And if you see that a primer as a whole, it has a lot of interesting research. So you can do FI open interest analysis, Max Pain, and we do have option strategy builder by which you can create builders. And we have a separate page for FI, the intraday scanners. So about those details, we can definitely add more values. And if you see that there is a pop-up which says that become a Prime member, do consider, because we although we made it as free to use access for a limited time, but if you become a Prime member, you may be the first person getting notified about any interesting development, because every tool what we come up is the research outcome. So you get a early hand access, and then you can also participate in the research conferences, and then we can even debate about the success ratios and other aspects as well. So we may even conduct some the conferences, and those things are in the pipeline. So you can become a member, and by which you will get the uninterrupted the services that will definitely add value for the whole community. So what we plan to charge is maybe kind of 5,000 rupees for a year, and for a very limited time, for a very few users, we are offering it kind of a 30% discount. So if you wish to redeem the 30% discount, I hope the pop-up whenever it shows that it actually gives you the coupon code as well. For a very limited time, the coupon code may be there. So if you see this video a bit late, may not be there. But I hope the early users, those who provide support to us, and we wish to join you by giving you a special discount of 30%. So use the coupon code and do join us, and that motivates us, and that will in turn finance us to the whole research and the technology and make you quite accessible. Remember, for a whole year, with the 30% discount, you're getting this tool at just 3,500 rupees. I believe it's worth. And if you feel so, just go ahead and subscribe it as well. And make sure that subscribe the video as well, so that you don't miss the next update. Thank you.